Joining me now with more on how this market is looking at the setup is Jay Jacobs, U.S. head of Thematic and active ETFs at BlackRock. Jay, welcome.
Thank you.
It's been a few weeks since we touched base, and a lot has changed, of course, in the market. What is your view?
Well, this market's playing out as we expected a couple years ago when we released our Mega Forces framework, which is really looking at 5 powerful trends that are impacting the markets. 2 of those trends are artificial intelligence and geopolitical fragmentation. I think we've seen both of those kind of really driving markets this year, with the DeepSeek news 1 week ago, as well as the tariff news this week.
So let's talk a little bit about the tariff news in terms of how your company and you within BlackRock are navigating that when it comes to ETFs and exposure.
Well, I think one of the things that investors have to keep their eye on now is how much of their portfolio is exposed to tariff risk. One of the sectors that's going to have some of the most exposure is really technology stocks. And U.S. tech has been, the belle of the ball for several years now, but it is a sector that gets 60% of its revenue overseas. So if you believe in U.S. tech still bringing this incredible growth engine, but are worried about risk of tariffs and geopolitical fragmentation, you really need to take a new lens of kind of focusing on more domestic-oriented tech companies. We did release a strategy on this called IETC. It's a U.S. tech-focused fund, and it's looking at who hires in the U.S., who builds their technology in the U.S., and primarily who sells their technology within the U.S. to keep that tech exposure, but really try to isolate that geopolitical risk.
Let's talk about artificial intelligence. Of course, this hype has been real for several years with the onset of OpenAI. What is your expectation for AI in 2025?
This is still one of the most powerful themes in the market, and probably more broadly across the economy and society. With some of the news last week, what it showed us is that this is still early in this technology. While we're seeing billions being spent to build out digital infrastructure to support artificial intelligence, and we're seeing cutting-edge models, there's still opportunities to innovate, like creating lower-cost small language models. So I think adoption is going to accelerate, particularly as you see costs potentially come down in artificial intelligence. But you're also going to see leading Mag 7 companies still push the frontier for what AI is capable of.
Certainly the Mag 7 has been in focus. We'll get earnings results from Alphabet and Amazon this week. Anything in particular on your radar for those firms when it comes to AI?
I think the big thing is going to be their continued commitment to deploy capital into artificial intelligence. We want to have models that are ever more powerful. We want to have digital infrastructure that can support growing use of AI. Every time we type in a ChatGPT query, it needs that digital infrastructure behind it. So we're looking for companies to really reaffirm and provide more detail on how they're continuing to invest in digital infrastructure.
So we have seen some choppiness this year, and many market watchers, many guests on our show have said, yes, buckle up for some volatility, but by and large, they do still see fundamentals are in place, and they expect the market to rise. Has some of this choppiness changed your view at all?
Well, it's put a new emphasis on diversifiers in a portfolio. Typically investors want to look at stocks and bonds, but we're seeing more use cases for alts like gold, like Bitcoin, that are just not going to be driven by the same macro factors as equities or bonds. In particular, gold and Bitcoin can benefit from things like rising geopolitical risk or rising fears about inflation. So we think these are great potential portfolio hedges to have alongside your stock and bond portfolio.
In terms of other themes that you're watching, AI, we know, is one on everyone's radar. What are other ones maybe under the surface that you're paying attention to?
Well, one of the other mega forces that I think we should keep an eye on is our demographic divergence theme. This is about aging populations in developed markets. This is also about more youthful populations in emerging markets. We think we could see some tremendous medical breakthroughs in the United States this year to treat advanced age-related diseases, Alzheimer's, Parkinson's, various cancer drugs. So we don't want to lose sight. AI and geopolitics are certainly in the news. As the population ages in the U.S., I think there's going to be a tremendous focus on medical innovation this year.
What about infrastructure?
This is one of our highest conviction themes, and we've seen a tremendous amount of client interest in infrastructure this year for 2 reasons. One is from a policy perspective. As we see more reshoring, more domestic protection of industries, we need to build out infrastructure, better highways, better ports, better airports. On top of that, though, infrastructure is very unique in a portfolio. It tends to be very defensive because people still need to drive to work. And it tends to be more of an inflation hedge. You can raise tolls on a bridge if inflation starts to increase. So it's a theme that we like both from a growth perspective, but also from this kind of diversification, defensive inflation hedge as well in a portfolio.
So you mentioned gold and Bitcoin earlier. I want to dive a little bit deeper into those. Bitcoin, at least, is something we've been watching closely, as it has been moving in some ways in tandem with the market, but with a bit more risk tied to it. What should our viewers know?
I think what the market is missing with Bitcoin is they tend to view it through this kind of risk on, risk off lens, which would suggest that it should be tied to our stocks up or our stocks down. The reality is, over the long term, Bitcoin is not a risk on, risk off type of idea. It's really going to be driven by more adoption of individuals and institutions that view greater geopolitical risk, greater need for diversification, and potential inflation hedges. So the short term of how Bitcoin is trading is not reflective of what the long-term use case is of Bitcoin. I think when we see these market sell-offs in tandem with stocks, it's a good opportunity for investors to kind of rethink what is the purpose of Bitcoin in their portfolio.
Jay Jacobs with BlackRock. Jay, thank you so much for joining. He's the U.S. head of Thematic and active ETFs at BlackRock. We appreciate it.
Thank you.